any donation that gets made has a tax implication to it, right? So SARS will allow you to donate up to 100,000 Rand in any given year, tax-free. Anything above the 100,000 Rand, you typically looking to pay about 20%, 20% tax on that donation. This is where it starts becoming a bit scary to, to move properties around. And this is why we normally so adamant that you actually do estate planning prior to buying the property, because it's a lot easier to deal with the problem initially as opposed to after the situation already arises. But simplistically, if you donate, typically you have to pay donations tax. So what we'd be looking at doing is we'd be looking at selling the property to, for example, to a trust. The reason I'm saying trust, also maybe just to take a step back, is you can do it directly to your daughter, but then your daughter's going to have the same question in a couple of years' time when she wants to give it to her daughter, or something happens and she passes away, so typically speaking, if a property is in a family environment and people are able to benefit from this property, be it by way of occupation or renting the property out and getting rental income, I normally suggest putting it into a family trust so that it can just sit in the family trust, especially with estate planning in mind. It's not a bad idea, because depending on the assets that you have, there may be some form of justification to be able to move it to the family trust. Either way, though, you would probably be looking at selling this property to the trust or your daughter. The reason I say sale is because then it's not a donation. So that's already step one. You'd be looking at doing an outright sale, skip the donation tax part of it. So that ticks one box. But now, unfortunately, SARS knows that people do this, because when you sell the property, then all you do is you create a loan account and you say, I've sold the property for R1 million. So you've now got the property, but you owe me R1 million, right? And then there's ways in the books year after year you can deal with that R1 million. The problem is, people used to do this a lot with trusts. And then SARS introduced certain provisions in anti-avoidance provisions in terms of Section 7, basically saying, no, you're not allowed to do that. If you have a loan against the trust, there's an expectation that the trust has to repay this loan to you at a certain interest rate. Because if it doesn't, we're going to consider that portion of the interest under the amount that they state as being the appropriate interest rate. We're going to charge you donations tax on that.